We're going to talk about raising capital. It's moderated by Dean Arbit. He's been a trailblazer in cannabis and cannabis-related media. He helped found Smell the Truth, which is a big website on SF Gate in 2011. And he's still the publisher for that, and he runs a lot of other different companies, and he's fantastic. Let's hear it for the one and only Dean Arbit, everybody. Dean Arbit. You need a mic, you need a thing, you got it? All right, do what you do.
Gaio, thank you for the spirited welcome, and Alex, as always, he's not here, but thanks for a great show and a really, really good lunch, by the way. So this is the investment panel, something that is a very hot button sort of item right now, and we've got two great experts. We've got Ted Rowe and Arthur Kwan that I want to bring up. What we're going to do is talk about investment and the need for investment, as we all know. So if you plan to scale in this space, right now things have sort of reached a different level. And as we're seeing with big private equity starting to come in, and obviously big money north in Canada, where federally their standing allows them to raise massive amounts of capital. We've seen Constellation Brands come in and dump $4 million into Canopy, blowing that valuation up. We see Tilray popping it over a valuation of basically making them a bigger company than American Airlines, and other very large concerns over there, which underscores the need for, if you're going to compete, you need to be able to be well capitalized. And we've got a couple great resources here that bring very different perspectives to investors, because these are the folks that will help you raise money, and they're the folks that will help you make sure that you do it compliantly. So I'll just have Arthur first just say a few things about what you do in your company, the CannaIncome Fund.
Sure, sounds good. Hello, is this working? Yeah, I believe so. Okay. Hi, my name is Arthur Kwan. I'm a Canadian. I run a private equity fund up in Canada called CannaIncome Fund. We got started earlier this year. By way of background, I was a former investment banker for 18 years in Canada. So CannaIncome Fund is a diversified cannabis investment fund. We invest across the entire value chain of the cannabis sector, so cultivation, extraction, production, ancillary services, and dispensaries. To date, we have 8 investments in our portfolio, and we're actively looking into the US right now.
Awesome. And then we've got Ted Rowe, who's a legal professional and someone very well versed in the industry here in Oregon. Ted, a little bit something about yourself and your practice?
Certainly. Testing? Oh, there we go. My name is Ted Rowe. I'm an American. I am a practicing attorney based here in Portland. I've been representing clients in a variety of industries for over 20 years. I've been representing people in the cannabis industry for well over 10 years now. I also represent foreign companies, sometimes that are investors, sometimes that are involved in cases already in the United States. I specialize in business and intellectual property.
Excellent, thanks. So, Ted, we'll go right back to you. So, I think something that really interesting about your perspective is that you work with different types of entities, clearly, and in investment circles, there's a huge line between being a company that touches a plant versus a company that engages in an ancillary business that does not. So with software, platforms, pipes, hardware, are there different strategies for approaching investors based on the type of business that you run?
That's an excellent question, because sometimes I represent businesses that are seeking capital and sometimes I represent the investors. So I have a perspective from both points of view. I would say with ancillary businesses, we're dealing with something that's essentially unregulated. And I mean unregulated in a way that is no different than a non-cannabis business. So how you approach investors, and there are going to be some similarities. For example, one of the things that you're going to want to ensure when you're looking at investors, and I'm sure Arthur can speak to this as well, is that you want to have a proper valuation of your company. And I can speak about this later if we'd like, about some of the brief regulations that you're going to need to comply with, SEC regulations, even to sell securities, sell stock in your company, essentially. But one of the big things I see a problem with frequently, and this is across the board, whether it's ancillary or direct cannabis businesses, is an improper valuation done of your company. And this creates a couple of problems. One is it's hard to have an investor take you seriously because they know what the businesses are worth. And so if you're coming in substantially overvalued, it's hard to attract investors to begin with. Number two is it creates actual legal problems for you. If you overvalue your company and then people invest in it, you have a pretty high likelihood actually, that you could buy into what's called a minority shareholder lawsuit, where if you can't deliver on the numbers that you're talking about, which is very hard when you overvalue a company, that minority shareholder is going to sue you. And as a corporate officer, you have a fiduciary duty, a legal duty to minority shareholders. So that's one thing to keep in mind. Another thing that is different in how you approach investors from whether it's ancillary or cannabis related is, are they permitted to invest in your company to begin with? And we had an interesting discussion in the green room before we came out about this. And that is, if it's an ancillary service, anyone can invest in it. It can be a foreign national, it can be someone from another state. However, if it's a direct cannabis business, if it requires a state license as a producer, retailer, wholesaler, or processor, for example, in Washington, not only can foreign nationals you can't even be from another state. You have to be an Oregon resident. Washington resident. Oregon has a much less strict scheme. However, that being said, there's nothing in the regulations that permits it. It just doesn't not allow it, if that makes sense. But there are problems. For example, we have to get background checks to be a licensed in a direct cannabis business in Oregon. How can Oregon do that if it's a foreign national?
Well, what makes it tough is if you're, for instance, a company that's regulated and you got to do background checks. If you have a public company, for instance, that's on your that owns more than 20% of your company, then technically everybody from that public company, all the directors, would need to get background checks for the application for a grow or a dispensary. So that's a little prohibitive. But those are great points, Ted. Let's maybe shift a little bit to one of the interesting things, having a Canadian. You guys are the guys with all the money right now. And access to capital being what it is, there are a lot less companies actually making money in cannabis in Canada relative to the US. And so right now, we spoke, you've got several investments in Canadian concerns, and right now you're evaluating opportunities in the US.
Yeah, no, that's right. You know, the interesting thing about the US market that we're finding is that a lot of the companies that we're evaluating, either in California or Nevada or Florida, they all have revenue, and And most of them actually, not only do they have revenue, but they have positive cash flow. And that's a bit of a refreshing change from in Canada. So for example, there's about 120 ticker symbols on my screen right now of cannabis and cannabis-related companies on either the Canadian Securities Exchange or the Toronto Venture Exchange or the big board, the TSX. But most of them are at the pre-revenue stage. And, in our portfolio of companies, only 2 of them are in revenue. So that's why we like the U.S. market so much, and we're actively seeking investments. I mean, there's certain foreign investment requirements that we need to follow, but there's a lot of capital in Canada right now.
Arthur, are there specific verticals or segments of the business that you guys find more attractive?
Yeah, so almost all the companies that we're evaluating right now are vertically integrated, or they have multi-licenses across multi-states. That seems to be the area that's attracting the most amount of capital. So it's no surprise that there's been a proliferation of U.S. companies doing RTOs or reverse takeovers onto the Canadian Securities Exchange. So, we all know about MedMen, Green Thumb Industries. I'm aware of at least 8 other U.S. companies that are filing their listing statements or prospectuses to become listed on the CSE right now. So it's a very hot market.
Very much so. So we actually discussed, and I think in both sort of comments there, I think valuation is a big thing. So I think maybe to come back to that, and we can sort of both yours, as far as opinions, are there multiples right now that we're seeing that are sort of prevailing? How you value your business, X amount of income equals this value or revenue?
Do you want to start? Go ahead. Okay. Yeah. So when we look at evaluating a potential investment, we look at 3 things. So the first one is the management team and the board of directors. What have they done before? Their track record, their backgrounds. Then the second criteria is, generally speaking, we look at the business plan, what segment of the value chain they're in, whether we see it as, and what's their niche or their competitive advantage in that segment. And lastly, we look at valuation. And it's no surprise that the valuations are just insane in the public markets. And we see quite a lot. So when we're evaluating companies that are in revenue, what we typically do is we apply some sort of financial metric. So maybe EV to EBITDA, or price to cash flow, or price to revenue, and we take a discount of that to the publicly traded comparables. If a company is pre-revenue, then that's a general rule of thumb where we need to be comfortable with the management team and their ability to execute on the business plan. And if they're coming to us at, say, a pre-money valuation of X million, we have to justify that. And with a company that's, that doesn't have revenue, the financial metrics go out the door. Then it's more of a qualitative judgment on management as opposed to a pure quantitative measure.
And probably you're leaning on scarcity or sort of other variables there that make that offering unique.
That's right.
Yeah. Ted, did you have some insight?
Absolutely. I agree in large part with what Arthur said. I've seen one of the largest things that you discussed that's important to my clients when they're investors are the management team. And definitely my clients have had me do checks on, background checks on board of directors of companies before they put a penny in. But that being said, and I agree also that with existing companies that have an existing revenue stream, it's somewhat easier to approximate valuation. You have hard assets. you have your P&L you can look at to start giving you an idea of the value of a company. Beyond the more esoteric valuations of how much do you trust the directors of the company to affect their business plan. I think the real problem exists when it is a pre-revenue company, when or even more difficult when it's a pre-licensed company in this industry, where you have a startup, you don't even have a license yet. How do you value this company? And I think that's a real question. I think what it ultimately comes down to, if you set aside the value of the particular individuals involved in the business and look at just dollar valuation, how do we do this? I often advise my clients when I'm representing not the investors, but the other side, the business raising the capital, to look at it, just like when you're selling or buying real estate, you look at comps. So often we will say, okay, we don't want to overvalue the company, but we don't want to cut our legs out from us. We want to be right in there of something realistic. So we can look to comparable businesses and what kind of revenue they're doing to kind of fill in that X in the equation, although there is no magic equation that gets you to the answer. What ultimately you're going to have to do is do an appropriate valuation based on comparable businesses, what they're doing in the comparable market. Because what a cannabis retailer does in Seattle is not what they do in Portland, is not what they do in Miami, is not what they do in LA. Mm-hmm. It just isn't. So it has to be, you have to use comparable numbers, and you can't kind of overblow this. But a startup might be much more valuable if they already owned existing real estate. Because there are all kinds, especially from foreign investment, because if the foreign investor doesn't have to invest in real estate, there's a whole federal law they don't need to comply with then.
True. Well, I'll say this, actually, as from being an investor and an operator, one thing is looking at investors and trying to derive a valuation as a company. I think it's also really, really important to look at the kind of investor and how strategic that money is when coming up with the value. Can that investor do anything else for you? Can he open more doors? Is he going to be there after you execute and commit to rounds, the following rounds? And so I think there's a lot of sort of beyond how you measure the proper investor and sort of that strategic partner going forward. I think there's a lot of things that you look at from the other side as well, as a company that's looking for funding, and what number I'd be comfortable with given what that investor is and the other sort of resources that they bring, right?
No, absolutely. I agree with that. You know, it is a competitive space up in Canada for both capital and good, what I would call good deal flow. So for example, one of the companies that we invested in is a consumables company. They're positioning themselves for when that segment of the market becomes legal up in Canada. And they were being courted by several other private equity firms, including us. And one of the reasons why they chose to go with us is because of the strategic value that we bring to the table. You know, we're pretty well networked in Canada. We can open up a lot of doors in terms of their distribution and dispensary strategies and their manufacturing strategies. So I think from the company's point of view, you know, you should always look at what type of investment dollars. And that's why, you know, for a public company that's raising capital in Canada, there's a tendency to bring on, you know, the fast money, the guys that are in it for a short-term trade. Whereas on the private equity side, you know, the companies that we're talking to are more interested in, you know, the type of money, the strategic value that the investors bring to the table, not just dollars.
That's an excellent issue that you raised, and since I'm assuming, I could be wrong, but most of you are businesses wanting to raise capital and not investors looking to invest in cannabis businesses. So I want to say this as well, and that is, don't think that you're the only one who has to have the background checks done. You should check out your investors. You should know who they are. You should talk to other people who they've done deals with. You should know their motivation in wanting to invest in your
and
company.
Ted, you know what a good point is? If anyone is worth their weight, they'll be happy to give you resources on folks that they've done deals with.
Absolutely.
And those folks should obviously, obviously be proponents of these guys. So that's something to ask.
Absolutely.
Yeah.
And if there is a circumstance where you're asking for essentially deal references and they're unwilling to give them, that is a large red flag. And I don't care what they're promising you. That is a serious red flag. And I'm not saying just drop the deal, but I would be very wary about moving forward without additional information. That being said, I also want to let you know that there's more than one way to raise money for your businesses. We've talked about one of them, which is essentially equity investment. But that's not the only way of doing this. You can structure these deals essentially any way you want. And one of the large ways of doing that is debt financing, or essentially obtaining loans. And actually, when I'm representing companies like yours rather than the investors, I tell them to kind of try to steer away from equity investment as much as you can, rather than maybe do a one-year loan it's called a convertible note. It converts to equity at the end of that year. Because if you're doing the loan in the name of the business, for example, and say you're a producer and the crop fails, and the business ends up going under, you also don't want to have personal liability for a $2 million loan. But at the same time, you need to know who you're doing business with, because does this investor have eyes on taking the business over? Business is business. They say that for a reason, and you need to be sophisticated business people, and your strengths may lie in other areas, processing, retail, production, but this is what I started when I first started lecturing at these things years ago, and I talked about tax consequences. I said, I understand that a lot of people who started in this industry were operating to a certain level of illegality for a long time, but now that it's in the light, everything has to be on the up and up. You got to pay your taxes, you got to pay your property taxes, employment taxes, you got to comply with your regulations. These licenses are extremely valuable, and you don't want to do anything that's going to jeopardize them. But that being said, look at all the options available to you, and not just one when it comes to the issue of raising capital. Because debt financing is a perfectly legitimate way of raising capital for your companies.
Or you go up and you win the pitch at the ICBC like my folks over there. So here's what we want to do. I think that there are business owners here in the room, and we're sitting here because investment is some interesting stuff, and I think there may be some questions out there. So I think we're getting kind of down to it. I want to make sure that if there are questions out there that we can address them. So take it out.
So I have a question. In this
Wait, let me bring the microphone to you so everybody can hear. Well, no, it's easier. It's easier.
Part of
with
he's
the
getting
microphone.
paid.
We're taping it, right. I'm
Yeah.
also, it's part of my job description.
Yeah.
It's a union rule, sir.
In this Oregon marketplace, which in the last year has turned into people really needing to cut back and get smaller and get tight and get much more control over their costs and get control over the actual amount that can be sold in this in the market. How then can you think about a valuation when you're looking at a traditional thing like a multiplier of EBITDA? I mean, if you're because of an artificially restricted marketplace, the amount that's actually able to be sold is restricted. how do you think about if you're small time, you know, we're a small farm and we're looking to get outside investment and we have to put a valuation on ourselves? How do we ourselves think about it in terms of our brain trust, in terms of our equipment, in terms of our proprietary ways of going, knowing that multipliers sometimes, you know, show things the wrong way? I mean, that's one of our problems.
Well, I'll start in on that because I think it's a great question, but I don't think it does anything to actually really turn any of the numbers upside down at all. I think it's still market share, and I think it's par for the course because your competitors are dealing with the same issues, right? So there was a race to the bottom. Your guys, the prices here, the bottom fell out, but you guys are all dealing with it, right? And at the end of the day, you still have numbers. You've got product going to stores. Everyone's margins are down, everyone's numbers are down. But at the end of the day, if you have market share here, when the market goes back up, your margins will rise. I think obviously a big part in something that folks do know, serious investors do know about the push for Oregon to be an export state, and that's clearly something that you all in this state really need to fight for.
And the only, yeah.
Comps in a smaller marketplace. I mean, I know in the larger ones it's easier, but
That's right.
All your competitors, those are your comps.
Yeah.
You have, I would argue that you have more comps than other markets do. I understand your problem is that the comps are all down, but that's not the.
He's just trying to find the data, the information.
Right.
How do you find who's doing what? You can talk to people, I guess.
You need to talk to people, but that's not the only asset that you have. You talked about one potential revenue stream that can potentially, I'm not saying it can, but potentially can cross state boundaries, and that is intellectual property. You can license processes, and that can be a revenue stream for you. And IP is one of those things that can be more easily valued than the entire business. But I understand.
But he's talking about, I got my weed, it's worth less now, and how do I value that?
Yeah.
But
Yeah, so as a business owner, if you're looking for outside investment, but you're worried about valuation and multiples of EBITDA, like Ted said, there are other non-dilutive investment vehicles. So, loans are just one of them, but, I know of 3 Canadian companies that are offering royalties to U.S. businesses. So gross overriding royalties or GORs is one. Convertible notes or convertible debentures. So there's other avenues outside of equity where you need to place a value on your business to access capital.
that's a great point. And also you don't want to, it's the one thing is right now, if you do have to raise and the valuations are being depressed, then actually debt financing is a pretty good way to sort of hedge against that. Yeah. More questions, Ngayo?
The past administration had a hands-off kind of attitude. With the current administration, is there any concern of the feds coming in and making some sort of headways or waves?
I guess I can speak to that. There has been, well, Jeff Sessions did say that he wanted to take a more active role in curbing the marijuana industry, cannabis industry in the United States. That's absolutely true. The Cole memorandum still exists, though. There's been nothing else that's overridden that. That being said, we had a discussion earlier where we were talking about foreign investment and what effects that could have, what could come into play in the United States with regard to foreign investment into a direct cannabis industry. And I talked about, it's called 18 U.S.C. 1952. It's a federal law that prohibits and criminalizes the promoting, distribution, and it has all these adjectives of an illegal activity. And since cannabis is still listed in the Controlled Substances Act, technically foreign investment could be viewed as a violation of that law. Now, that being said, as far as I know, it's not being prosecuted, but that doesn't mean it won't be. And given the current administration, let's put it this way, I felt safer under, well, in general under the Obama administration. So,
Sure.
not a Siri, just in general.
You think?
Hi, hello there. So I'm currently actually an Oregon laboratory. I'm the oldest laboratory in Oregon for testing cannabis, and I'm seeking expansion. I've been warned that if I get investment money from Canada, there's already been some people that have done this, and something about not being able to cross borders and come across, or vice versa, because of the investment. Can you help clarify what that's about?
Yeah, so you're absolutely right. I mean, I'm aware of several Canadians that have been banned for life from entering into the U.S. because they have either invested in a cannabis company or smoked cannabis or tried cannabis. And even, myself, I was just saying this to Ted in the green room. When I came from Canada, I actually brought 2 phones. My real phone that I put in my luggage, and then a burner phone in case I get stopped at the border. But that's the risk that as a Canadian looking to invest in U.S. companies, you have to take. But what I can say is that there's that has not, in my mind, deterred any Canadians from looking into the U.S. There's several financial companies and investment companies that are all actively looking into the U.S. because the one thing about Canada is that while there's no shortage of cannabis companies, like I said before, most of them are at the pre-revenue stage, and if you look at the multiples that these companies are being traded at, it's it's very lofty.
Do you know if it goes the other direction too, if Americans get banned from going into Canada?
I've never heard of that before, though.
So I think that if you go, at the border, if they ask you for what you do, you don't tell them cannabis. Yeah.
I've actually heard the opposite. They're saying it's worse to lie to a customs officer than it is to be in the industry. They say if they find that you've been lying, that's a much worse violation.
Well, I don't think he said you should lie. He just said, no, don't. If you're in production, you can tell them you're a farmer and still have that be a true statement.
Go ahead and do your thing and
Yeah.
see what happens.
It's a funny story.
I
because-
just told them. I just told them I was attending a conference, and they were like, "Which conference?" I was
Yeah.
like, "The International Cannabis Business Conference." And then they were like, "Did you bring any cannabis?" I'm like, "No, you guys got pretty good weed here in Vancouver." And they're like, "Enjoy your vacation, sir." So and that happened when I left Berlin too. So I mean, I don't think you need to let on that you're $1 million investor in a bunch of cannabis industries or whatever. But if you're just coming to town to throw a conference that they're throwing, they can't sweat you too much. I don't know, man. Who knows what this American government's going to do? That's all.
You know what's ironic about this is that the U.S. has been promoting programs for many years that solicit investment from foreign nationals. They're called EB-5 programs, where this is a really large thing in China. It's a way to fast track somebody's immigration status in the United States. They can become a U.S. citizen within a couple of years if they, I think it's $5 million for under certain projects, or $10 million under others. But I think that we are doing our own country a disservice by not allowing this kind of foreign investment into the U.S. We could be bringing in substantial dollars.
What it does is it brings forth how fractured the laws are between state and federal, because when you've got a Canadian coming from a place where federally what he does is legal, and he's coming to California where we pay our taxes, or Oregon where we pay our taxes and we pay for our permits, and we're vested in this industry, yet it's still a crime because of the federal level, the federal layer. So it's just part of the goofy nature of where we're at, and that's also why banking is what it is as well. So these are just hurdles, and they'll make us stronger, I guess. More questions?
Yeah, I have a question. I own a building, and I'm having great difficulty in refinancing the building because originally the building didn't have anything that had to do with cannabis. Now it does. And so what's your suggestion on how to finance a building without going to hard money lenders who charge you an arm and a leg and want your leg as well?
I can speak a bit to that. I had a client in an identical circumstance. What she's talking about is essentially there's, because the banking industry is regulated federally, they have essentially told banks that if they directly finance operations that house cannabis industry companies, they can lose their licensure under the federal banking regulations. So, you know, you're not going to get financing from U.S. Bank or Chase, or just so completely put that out of your head. You're in I won't lie to you, you're in a tough situation. Outside of self-financing, hard money lenders or putting up sufficient, well, but even then, even if you had sufficient collateral, you simply can't get financing from a mainstream bank. There was for a while what Merchants Bank, M-Bank was doing it, but they weren't for many years now. They did it for a little while, but there's no banks, as far as I know, in Oregon that will do what you need to have done.
So what do you do?
Yeah, so maybe
Private financing.
I can jump
Well,
in.
that's a
there.
hard
So-
money lender.
Yeah, so up in
basically.
Canada, we have a couple REITs, so real estate investment trusts that focus on cannabis real estate. Are there vehicles like that in
There are
the US?
REITs here, but obviously you can't do that because of the federal state.
Are they state operated?
Sorry?
Are they state operated, or are they private?
No, they're private.
Okay.
But they lend against real estate.
So,
But that's essentially what he's describing. What you're describing is hard money lending.
Right.
You know, and really that is your option, and that's one of the reasons why those rates are so high, because they know they're the only option.
yeah, so I've met with Canadian companies as well who have been courting me. But from what I understand from what you said, that's something that I shouldn't even touch because
I didn't say that, and especially under these circumstances, I think that's one potential avenue for you, because you don't own well, let me take that back. Are you a license holder?
Okay, so I own a shopping center as well as I own cannabis companies and I own licenses, yes.
But you need refinancing of a company that is not a license holder.
This is real estate, though.
Correct, it's real
Yeah,
estate.
just real estate.
It's
So-
real estate,
Yeah,
but
no,
it
If
whole-
she's taking money from the Canadians for real estate, you can absolutely
Yeah,
do that.
absolutely.
That's
you can
that's
do
what
that.
you need
That-
to do.
That you can
Yeah.
absolutely do.
Yeah.
In fact, that's
Yes.
that's one of the great things that I do want to tell everyone is you can break up your companies a bit and get foreign investment by allowing them to buy the real estate, and then you pay them your lease.
It's just a sale leaseback.
Right, exactly.
You have a hard asset that U.S. lending institutions have
Right.
a tough time with, but not Canadian ones.
But that is permitted. You
Yeah.
absolutely can do that. I think in the end, besides finding investors who are interested in your businesses, please, please, please consult with lawyers. I'm not saying me. I mean, I'd be happy to speak with you, but talk to a lawyer, retain a lawyer, because these are very technical rules that you could easily violate without ever realizing it, and the penalties are relatively severe.
We got, I think, room
I
for
have
one more.
In the event that someone did get an investor, let's say we have a company and you get an investor into, where's the money going to go into if we're having these banking issues already? Where are we going to be able to get your money in to be able to work it with the company that we are building?
So one of the opportunities that we're looking at is a vertically integrated operation in California. And so I asked them the exact same question. And you know, like Ted said, you can't go to Bank of America or Chase or Wells Fargo. But what they said that they've been doing business for the last 8 months with a credit union in California, and they said that this credit union has a don't ask, don't tell policy, and that's what it seems to be working for them.
So generally, it's a lot tougher to get financing from a bank, but you can play around and you need some redundancy, like have multiple bank accounts. I think that's how most of us do it. You get shut down, you got to have another one.
Yeah.
Yeah.
I agree.
Yeah.
And I think credit unions are a good option if you can get it. But I think this also suggests that it's everyone's responsibility here to tell their friends and everyone else to contact their U.S. congressmen and senators about changing the federal banking laws that allow this to be operated like any other regulated business.
Because we're paying the same taxes.
Yeah.
Even more of them.
Yeah.
All right. Guys, I think that's it.
That's it.
That's our time. Thank you guys so much.
Let's hear it again. Dean Arbit, the rest of the panel, and that.